And welcome to Investment Banking University, where we teach you how to become an investment banker. Today, we're going to be talking about the very important topic of investment banking coverage and origination. At Investment Banking University, we have our own proprietary investment banking coverage and origination methodology. So when you're first getting it started in investment banking as an analyst or an associate, your role is much more geared towards research and financial modeling and valuation. But as you go higher in the ranking or in the roles to VP and higher, the focus becomes M&A origination as well as coverage, mandate target matching. But we're going to get into that a little bit later. Starting out, the investment banker is going to choose what size of companies he or she is going to cover. For example, public companies, middle market companies, lower middle market. And from there, the investment banker chooses an initial vertical or industry, as well as sub-verticals to cover. And we're going to discuss how exactly to break down a vertical into different sub-verticals so it makes sense into a proper taxonomy. In step 2, we're actually going to then build an index associated with each one of the verticals and sub-verticals, which are going to be made up of public companies. In the index and the changes in the index are actually going to provide a measuring stick within which to evaluate targets. And so we're going to evaluate targets' performance relative to an index in terms of revenues, EBITDA, and multiples. And that's going to be the basis of our advising on trends. In step 3, for those just getting started, it's actually preferable to focus on the lower middle market and middle market. And what we're going to be doing is we're going to be building relationships with financial and strategic buyers as well as potential targets. And this means building your Rolodex. And the reason why we're reaching out to financial and strategic buyers is we're actually going to be getting their investment mandates. And we're going to be establishing a fee agreement for buy-side deals. And so this ultimately ends up being the layman scale for the fee on the buy side. And we're going to talk about what exactly that means and what the fee structure actually looks like in the investment banking course at investmentbankingu.com. So the fourth and final step, and we already touched on it a little bit, is after establishing one's coverage, is then to build an index. And building an index, we're going to be starting to advise potential targets on their strategic alternatives using information gleaned from the vertical and sub-vertical indices that we have built. And this is going to be tracking growth rates, margins, debt-to-equity ratios, and ultimately multiples. So the investment banker takes the index and establishes tiers within which there are peer groups. And this is why we pull the public comps, because we're going to benchmark a target company against those public comps. And by comparing a target's level of performance to its peers in the industry in general, the investment banker can determine when it's ideal to exit a business, when multiples are strong, and when it is not, when multiples are weak. And this is how investment bankers ultimately advise on strategic alternatives. So this is the methodology that Investment Banking University uses and that you're going to be learning in the banking book, as well as the How to Become an Investment Banker course at investmentbankingu.com. You can take that course online, you can take it in a weekend workshop, and you can also take it in a month-long training course. So go to investmentbankingu.com, download the free book, and you can learn investment banking coverage and origination in greater detail. Thanks a lot.